Hello investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is the IWM, which is the iShares Trust for the Russell 2000 ETF. And if you are brand new to this report, understand that each and every week I keep my lines on the chart from the previous week so you can see how the technical signals worked out. And as I zoom in here, you'll see that last week was right here. I drew this line saying that Monday and Tuesday we would most likely go up and then begin to pull back for the rest of the week. And you can see Monday we were up, Tuesday we were up, hit my pivot point target to the penny, and then on Wednesday started the drop. We saw a spike up on the opening on Thursday and then traded lower with this big red candle. And then look at that today, Friday the 30th, the last trading day of the month. We closed right exactly at my price target. Now, this is a lesson on basically the value of candle charts and how important it is to at least pay attention to the signals. You can see that my favorite candles involve bullish engulfing patterns, bullish haramis. You can see these candles resulted in higher prices. You see that? I also pay very close attention to bearish engulfing patterns and bearish haramis, which you'll see later on in this report. I also look for candles that have long shadows above the body, which tend to be bearish. I know some folks that all they do is they wait for long shadows below the candle to buy it, and they'll sell when there's long shadows above the body. Again, these are really basic concepts, and maybe you should take a technical analysis course or a candle charting course that will help you identify these. But the bottom line is, put your money in the direction of where the money is going. And of course, if you see the sellers come in, at the very least, use that as a signal for managing risk. Now, what does this mean for next week? Well, I'm going to erase all of these lines right now so that I could draw a new set. And I would like to say that we're going to go up next week. But from what the charts are telling me right now, I think we're going to go lower, and we could go as far down to this low or close to that low to test this support level down here. The bottom of these bodies is where I'm going to draw that support right around 217.5. And the reason I believe we're going to go lower next week is because you see the oscillators here. This is the stochastics oscillator. The blue line representing the K line is just about to cross the red line, which is the 3-period moving average of the K line. That's known as the %D. When those cross, that is when the sell signal is generated. Now, a little bit down below here, this is the CCI. And on this big red candle, we saw the sell signal come across right there as the CCI crossed down below the 100 mark, which is that red line. So the momentum indicators are telling us lower. We had a sustained volume to the downside, so it's telling us the sellers are still in force. And so if you are concerned about the downside, again, I recommend that you pay very close attention to our risk management disciplines, particularly the 1% rule for managing risk, and we make that available to all of our members. Now let's take a look at the diamonds. Diamonds was a similar report, but I said early on we would most likely go up to test this resistance high, and that's exactly what happened, but it didn't break out of that resistance high. It instead just kind of stalled sideways. And now as I clear these lines, I'm going to point your attention to what we're seeing here as well. Notice down below, the CCI is crossing below the momentum line. Look to the right. That scale says 0. That's the 0 line, aka the momentum line. And from what I've seen in the past, when the CCI crosses down below the momentum line, we generally get 2 to 4 days of downward momentum in the direction of the cross. So here we are showing almost a doji right there at the moving average, with the momentum shifting lower down below in the CCI especially So I do believe that we are going to continue lower in the Dow as well. Now, I'm not expecting a collapse of any kind, at least not yet, but I do believe we are going to roll over and start trading below that 20-period moving average. Now, this is very important because once the moving average has broken as a support level and there's a breakout to the downside, that moving average, which at this point is acting as support, once it's broken here, that support turns to resistance. So once we start moving below that moving average, I would expect an attempt to get back up over the moving average, but most of the time it fails. So we still have a little time before I believe the top is completed. But that does mean risk management disciplines are needed at this particular point because, again, there are stops building up under that moving average by many traders, particularly those who trade the Dow stocks. And option traders are paying very close attention to this level as well. So my downside price target on the diamonds is going to be right at the end of the line right there, which is going to be 335.26. Again, that's my price target for DIA on the downside. Let's take a look at SPY. That's the S&P 500 ETF, and you can see I left my lines on the chart. This was a very interesting thing that I've done. It's the first time, I mentioned this last week, it's the first time I've ever done this. And what I did is I said I'm keeping this longer term goal with that price target in place. But I said I do believe that before we hit this price target, we will go a little bit higher to test the highs. And so I drew this diagonal line with the end of the line being that target. Yesterday, we hit that target precisely, and guess what? Oscillators are rolling over to the downside. We see that the CCI is now crossing with a sell signal, and notice this, the volume is increasing on these red candles. It tells us that the sellers are motivated. They're still moving. So I'm keeping this longer term target in place, and I believe that we are going to break out below that 20-period moving average. So again, all the markets are lining up to the downside. Good idea to keep stops in place if you're an option trader. Reduce your long deltas, or consider at least, this is what I'm doing, I'm adding more negative delta. I'm putting on put spreads. I'm getting shorter as this market continues to hang at the highs here. There's a lot of economic signals that tell me that it's going to be a tough go ahead as inflation continues to rise. Let me just take a look at this. The Bloomberg Agricultural Spot Index is on the rise. Now, what is this? This is representing inflation in another way. And guess what? The Fed doesn't recognize this as part of the inflationary numbers. But we, the citizens of this country, know exactly how much more the prices are in the supermarket. We know how much gas prices are going up. We know that inflation is there, but the Fed continues to deny the fact that inflation is becoming out of control at this particular point. In my opinion, I think the Fed needs to raise rates to keep inflation in check, but they're just not doing it. So this becomes a very dangerous situation as we continue to flirt with hyperinflation, while this ostrich approach being taken by the Fed keeps many investors on the edge, because we're all looking at it and we're saying, okay, what's going to happen? This market needs to break, it needs to correct, and it's not doing it yet. So eventually when it does break, watch out below, because when it goes, it's going to go fast and furious. So I'm keeping my price target on the S&P long term. This is a long-term price target of 395.03 for the SPY. Taking a look at the VIX. Here we go. This, for the most part, goes inversely to the S&P. There's my forecast line. I'm keeping that in place. I'm not moving it. Why? Let's look a little bit closer and I'll show you why. See this bullish engulfing pattern that occurred yesterday? I look at the body. This is bullish engulfing-ish for those of you who are into the details of candle charts. This is a wide green body that engulfs the previous red body. I take that as bullish. This long shadow at the end of the downward trend here, or downward leg, is also bullish because that's taken very close to be an inverted hammer, which is bullish. Today, right here on the 30th of April, we had The opening, the high and the low and the close are now significantly above that 20-period moving average. The momentum indicators are still moving higher. And again, this is known as the fear index. I'm putting a conservative price target on the VIX at 2337. And you'll also notice how this 20-period moving average is starting to roll to the upside. This could be a bottom forming on the VIX, which could mean a top forming on the S&P. And again, it supports all my ideas for lower prices down the road. And finally, let's take a look at the Qs. QQQ, it's the tech sector. Take a look. I'm keeping that in place as well. Look what's happening. We have negative divergences on the CCI with a cross below that momentum line right there as I magnify that, below the zero line. So the momentum is now shifting. No doubt it's shifting. The stochastics is heading lower. Volume here is increasing on these last days as we move lower, and we are right at that 20-period moving average. Once we cross below that moving average, there are now gaps below the market right here that need to be filled. Gaps fill 80% of the time. Eventually that gap will fill, I believe, because the market is long overdue for a correction, and I'm even being conservative with a gap fill for the Qs right around 320. So that's my weekly market report. Please do everyone a favor and like and share. Just hit the like button. If you'd like to add some comments, go right ahead. I welcome those comments. I welcome questions from the audience, because if I can contribute to the value in your world with regard to trading and investing, then I will most certainly do that for you. And if you would like to subscribe to any of my trade alert services, just go to the links in the description box, and one of our representatives will be very happy to help you out. So have a great weekend. Talk to you soon. So long.